Hey everyone, and welcome back to the channel. Today, we're diving deep into the origin story of something that has completely reshaped our world. Bitcoin. But to truly understand why Bitcoin was created, we need to rewind the clock. Let's go back to 2008. The year 2008 wasn't just any year, it was a year of global panic. A time when the world's financial system teetered on the brink of collapse. The global financial crisis, it's a term we've all heard. But what did it actually mean for everyday people? It meant foreclosures, lost jobs, and savings that vanished overnight. It was a brutal wake-up call. The crisis started in the United States housing market. For years, banks have been giving out risky loans, known as subprime mortgages, to people who couldn't really afford them. These weren't just a few bad loans. It was a systemic problem. Wall Street wizards then bundled these risky mortgages together into complex financial products called mortgage-backed securities and collateralized debt obligations, or CDO. They sliced them up, stamped them with top-tier credit ratings from agencies that should have known better, and sold them to investors all over the world. Pension funds, insurance companies, even other countries. Everyone wanted a piece of the American housing boom. It was like a giant house of cards. Everyone was making a ton of money, so no one wanted to look too closely at the shaky foundation. The assumption was that housing prices would just keep going up forever, but they didn't. When the housing bubble burst, people started defaulting on their loans. Suddenly, those safe investments weren't worth the paper they were printed on. The dominoes began to fall, and they fell fast. In September 2008, Lehman Brothers, a massive investment bank with over 150 years of history, declared bankruptcy. It was the largest bankruptcy in U.S. history, sending shockwaves through the entire global financial system. The credit markets froze. Banks stopped lending to each other because they had no idea who was solvent and who was about to go under. It was a crisis of trust. The very institutions we were supposed to rely on had failed us spectacularly. Governments and central banks around the world had to step in. They pumped trillions of dollars into the system through bailouts and what's known as quantitative easing. Essentially, they printed money to save the banks. The message was clear. Some institutions were too big to fail. While ordinary people lost their homes, the architects of the crisis were rescued with public money. This created a huge amount of anger and a profound sense of injustice. People felt betrayed. They realized the system was rigged, favoring the powerful at the expense of everyone else. It was in this exact climate of distrust and disillusionment that something revolutionary appeared. On October 31st, 2008, just weeks after the Lehman Brothers collapse, a person or group using the pseudonym Satoshi Nakamoto published a 9-page white paper. The title was Bitcoin, a peer-to-peer electronic cash system. The timing was no coincidence. Satoshi saw the chaos of 2008 not just as a failure of specific banks, but as a fundamental failure of the centralized financial system itself. The problem was trust. We had to trust banks to hold our money, governments not to devalue our currency by printing too much of it, and payment processors to handle our transactions. Satoshi proposed a radical alternative, a system that didn't require trust at all. Satoshi's vision was a decentralized, digital currency. Instead of a central bank or a government controlling the money supply, Bitcoin would be governed by mathematics and cryptography. Instead of a single company's ledger tracking transactions, there would be a public ledger, distributed across a global network of computers. This public ledger is what we now know as the blockchain. Every transaction would be broadcast to the network, verified by its participants, and then added to the chain in a block. Once a block is added, it's permanent and unchangeable. This process is secured by something called proof of work, which requires computational power to solve a complex puzzle. The participants who do this work, Kaid miners, are rewarded with newly created Bitcoin. This is how new coins enter the system in a predictable and transparent way. Let's break down why this was so groundbreaking. First, it removed the need for middlemen. With Bitcoin, you can send money directly to anyone, anywhere in the world, without needing a bank or a payment service like PayPal or Visa. This is what peer-to-peer means. It's just you and the other person. This drastically reduces fees and settlement times, especially for international transfers. Second, it solved the double spending problem. Before Bitcoin, creating a digital currency was tricky. How do you stop someone from just copying and pasting digital money and spending it multiple times? Satoshi's blockchain was the genius solution. Because every transaction is recorded on a shared public ledger, the entire network knows who owns what. You can't spend a coin you don't have, and you can't spend the same coin twice. Third, Bitcoin introduced the concept of digital scarcity. There will only ever be 21 million Bitcoin. That's it. It's written into the code. This is a direct response to the quantitative easing and money printing we saw in 2008. Unlike national currencies, which can be printed at will by central banks, leading to inflation and devaluing your savings, Bitcoin has a fixed supply. It's more like a digital gold. On January 3rd, 2009, Satoshi Nakamoto mined the very first block of the Bitcoin blockchain, known as the Genesis block. And embedded within the code of that block was a message, a headline from the Times newspaper. The Times 3, Jan. 2009 Chancellor on brink of second bailout for banks. This wasn't just a random headline. It was a timestamp, a permanent digital fossil, proving when the network began. But more than that, it was a statement. It was a direct, pointed critique of the very system Bitcoin was designed to challenge. Satoshi was effectively saying, here is the problem, and here is my solution. This message is forever etched into the foundation of Bitcoin, a constant reminder of why it was created. For the first couple of years, Bitcoin was a niche interest for a small community of cryptographers, cypherpunks, and computer scientists. They were the ones who saw its potential. They mined it on their laptops, traded it on forums, and experimented with what it could do. The value was practically zero. The first ever real-world transaction was famously for 2 pizzas, which a programmer bought for 10,000 Bitcoin. Today, that would be worth hundreds of millions of dollars. But the idea started to spread. People who were disillusioned with the traditional financial system were drawn to Bitcoin's promise of a more transparent, equitable, and decentralized alternative. It represented a peaceful protest, a vote of no confidence in the old way of doing things. It was a technological solution to a political and economic problem. So, when you think about Bitcoin, don't just think about price charts and market volatility. Remember where it came from. Remember the ashes of the 2008 financial crisis? Bitcoin wasn't created in a vacuum. It was forged in a moment of global economic turmoil, born from a deep-seated frustration with a system that had failed millions. It was a direct response to the bailouts, the lack of transparency, and the concentration of power in the hands of a few financial institutions. Satoshi Nakamoto gave the world a choice, a way to opt out. Whether Bitcoin will ultimately fulfill its grand vision is still being written, but its origin story is a powerful lesson in how innovation can emerge from crises. It is a story about challenging the status quo and imagining a different kind of future for money. It is the story of how one of the biggest financial crises in history sparked a technological revolution that continues to unfold to this day. Thanks so much for watching. If you found this journey into Bitcoin's history interesting, please hit that like button and subscribe for more deep dives into the world of crypto. Let me know your thoughts in the comments below. See you in the next video.